students, welcome to Sunil's tutorial. I'm Sunil Madwani and today we'll be doing this chapter called as cost reconciliation statement. First we are going to do question number 17. We're doing illustration 17 in the books of Enthusiastic Limited. Right. Now they said that Enthusiast Limited commenced business on 1st April 2003. The cost and financial records are maintained for the year ending 31st March. From the following information, prepare statement showing cost records. First of all, they have asked you to make cost sheet for the year ending 31st March 2004. Particulars: CPU, PC. First, let's make the format of cost sheet. Direct material, direct wages, direct expenses. Will give you prime cost and factory overheads less sale of scrap, add opening stock of WIP, less closing stock of WIP, right? That will give you work cost and office overheads. Will give you cost of production and opening stock of finished goods. Less closing stock of finished goods. That will give you cost of finished goods and sales overhead. Will give you total cost and profit. Will give you sales. Right? Let's start. First, let's make the cost sheet. Now, they have given you that, guys, direct material consumed 20,000 kgs, direct wages, factory overheads, administrative overheads, sales overheads, stock of output produced is 2,000 kgs, right? That means stock of output produced as on 31st March. Closing stock is given to you as 2,000 kgs and they are saying sales is 16,000 kgs. Working note 1. Opening stock plus produced minus closing stock gives you sales, right? Let's see the units. Now they said that you are selling 16,000 units. You are selling 16,000 units and the closing stock is 2,000 units. That means how many units you must have produced? There is no opening stock. That means you must have produced 18,000 units. 18,000 minus 2,000 will give you 16,000. So units is going to be 18,000. Right? Now let's start. They said direct material consumed is 20,000 kgs at 28.5 per kg. So when you multiply 28.5 by 20,000, you will get 5,70,000. So direct material is going to be 5,70,000. To get CPU, divide TC by units. So 5,70,000 divided by 18,000 will give you 31.67. Right? Next, direct wages is 3,000 man days and it is 80 rupees per man day. So it will be 3,000 into 80, 8 3s are 24, 2,40,000. Right? PC is going to be 2,40,000 divided by 18,000, that is 13.33. Right? Now, there are no direct expenses. So your prime cost is going to be nothing but 45, and this is going to be nothing but 8,10,000. Right? Next, factory overheads are given to you as 20% of prime cost. So 20% of 45 is going to give you 9, and 20% of 8,10,000 will give you 1,62,000. Right? Next, then you have administrative overheads is 30 rupees per kg of output. Now just a minute. Let's see, do we have any work in progress? Yes. You have work in progress as of 31st March 2004. Closing stock of work in progress is given to you as 1,62,000, which is going to be 9. There is no sale of scrap, there is no opening stock, there is closing stock of work in progress. So this is going to be 45, this is going to be 8,10,000. Next, office overheads. Office overheads, administrative overheads is 30 rupees per kg of output produced. You are producing 18,000 units, 30 rupees per kg. So 30 into 18,000, that is going to give you 5,40,000. So your cost of production is going to be 75, and this is 5, and this is going to be 13,50,000. Right? Now, you don't have opening stock of finished goods. Now for closing stock of finished goods, guys, how do you get closing stock of finished goods? First thing that you need to do is bring this figure down here as it is. Bring this figure down here as it is. So if I bring this figure down here as it is, this will become 75. Multiply it by the number of units unsold. How many units were unsold? 2,000 units were unsold. So multiply this by 2,000. Right? 75 2s are 150 and another 3 zeros. Right? Subtract this. 13,50,000 minus 1,50,000. That will give you 12 lakhs. Divide this by the number of units sold. You have produced 18,000 units, out of which 2,000 units are not sold. That means 16,000 units are sold. So divide this by 16,000, you will get this as 75. Fine, do you get this thing here? So if you divide this 12 lakhs by 16,000, you will get your 75. That's how you get your cost of finished goods. Once you get your cost of finished goods, next they said that sales overheads is 50 rupees per kg of output sold. Now you have sold 16,000 kgs. 16,000 into 50 is 80,000. No, this should be 8 lakhs. Right? In that case, this is 50 rupees per kg sold. How did I get this 50? 8 lakhs divided by 16,000. So this is going to be 120. After cost of finished goods, you have to take the number of units sold. Before cost of finished goods, you have to take the total units produced. Okay. So this is going to be 20 lakhs. Right? Sales. Sales is given to you as 130 per kg. Sales is 130 per kg. That means profit is 5 rupees per kg. 5 into 16,000. So that is going to be 80,000. So this is going to be 20 lakh 80,000. So you finished making the cost sheet. The next thing that you need to make is the P&L account, right? The financial statement. Let's make P&L account. Particulars, rupees, particulars, rupees. Right? Let's see this. Now, they've given you that direct material. So this is going to be debit expenses and losses to direct material. Direct material is 20,000 kgs at 26 rupees per kg. So that is going to be 5,20,000. Right? Next, direct wages is 3,000 man days at 85 rupees per man day. So 3,000 into 85 will be 2,55,000. To direct wages is 2,55,000. Right? Next, to factory overheads. Factory overheads is given to you as 3,60,000. Factory overheads is 3,60,000. Next, to administrative overheads is given to you as 4 lakhs. To admin overheads is 4 lakhs. Right? Next, you have sales overheads 9,60,000. Sales overheads 9,60,000. Next, you have stock as on 31st March. Closing stock of finished goods. Closing stock of finished goods is given to you as 1,50,000. Closing stock comes on the credit side by closing stock of finished goods is given to you as 1,50,000. Right? Next, closing stock of work in progress is 1,62,000. Next, rent income. No, before that you have sales. By sales, you are selling 16,000 units at 129.5. 16,000 into 129.5 is 20,72,000. Right? Then you have rent income. Income on the credit side by rent. Rent received is 1,20,000. Next, you have preliminary expenses written off. Debit expenses and losses. Preliminary expenses. Preliminary expenses written off is 30,000. Right? This finishes my P&L account. Tally this. When you tally this, your debit side is going to be greater. Debit side is 25,25,000. This is 25,25,000. This is by net loss. You're going to incur a loss. The loss that you're going to incur is 21,000. Right? Now that I have cost sheet and P&L with me, I can make working note for cost reconciliation statement. Working note, particulars, P&L, debit, credit, cost sheet. Right? Let's see this. Now you have to find out all those entries in which the figures are not same. Now let's see this. Direct material, in cost sheet 570, in P&L 520. So you will record that in working note. In working note, those figures will be recorded where the amounts are not the same. Those entries will be recorded where the amounts are not the same. So direct material in P&L is 5,20,000 and in cost sheet is 5,70,000. Right? Then direct wages. Direct wages in P&L is 2,55,000 and in cost sheet is 2,40,000. Right? Then factory overheads. Factory overheads. Factory overheads in P&L is 3,60,000 and in cost sheet is 1,62,000. Right? Then closing stock of WIP in cost sheet 162, in P&L also 162, therefore I will not record it. Then office overheads. Office overheads in P&L is 4 lakhs and in cost sheet is 5,40,000. Right? Then closing stock of finished goods is 1,50,000 in cost sheet and 1,50,000 in P&L, therefore I need not record it. Sales overhead. Sales overheads is 9,60,000 in P&L and 8 lakhs in cost sheet. Then you have sales. Sales is 20,80,000 here, 20,72,000 there. Sales. In P&L, it's a credit side entry, 20,80,000. Sorry, 20,72,000 in P&L and 20,80,000 in cost sheet. Right? Besides that, you have certain entries that have been exclusively recorded in P&L. For example, preliminary expenses. Preliminary expenses is 30,000 in P&L and it is not recorded in cost sheet. Besides that, rent received. Rent received. It's a credit side entry, amount is 1,20,000 and it is not recorded in the cost sheet. There is no rent received in the cost sheet. Once I have this, now I can make my cost reconciliation statement using this data. Let's see this cost reconciliation statement. As on cost reconciliation statement as on 31st December 2004, 31st March 04, particulars rupees, costing profit, add less financial profit. Right? Let's see this. Now, costing profit. Costing profit we found out from the cost sheet is 80,000. Right? Now let's see the working note, guys. Can we see working note? Now, in working note, let's look at direct material. Direct material is 5,70,000 in the cost sheet and 5,20,000 in P&L. It is more in cost sheet. More is more, less is less. Since it is more in the cost sheet, you will record this amount in add column, direct material. Right? 50,000. It is more by 50,000. Next, direct wages. Direct wages is less in cost sheet. Less is less. So direct wages, it is less in cost sheet. So 15,000. Next, factory overheads is less in cost sheet. So factory overheads, 1,62,000 minus 3,60,000. Right? So in that case, 1,98,000. Next, office overheads. Office overheads is more in cost sheet, so it will come in more column. Office overheads. Office overheads is 1,40,000 more. Then you have sales overheads. Sales overheads is less in cost sheet, so it will come in less column. Sales overhead, 1,60,000. Right? Next, sales is more in cost sheet, but it is a credit side entry. Since it is a credit side entry, it will be recorded on the reverse side. It is more, it will come in less column. Sales amount is 8,000 is the difference. Right? Preliminary expenses is less in cost sheet, so it will come in less column. Prelim expenses 30,000. Right? Rent received is less in cost sheet, but it is a credit side entry, therefore it will come in the add column, more column. Rent received 1,20,000. Right? Now 1,20,000 plus 1,40,000 plus 50,000 will give you 3,10,000. Right? 8 lakhs plus 3,10,000.
50,000.
Sorry, 50,000, 3,90,000. Right? Then 15 plus 198 plus 160 plus 8,000 plus 30,000 will give you 4,11,000. Right? 3,90,000 minus 4,11,000 is 21,000 negative. If you check this 21,000, this tallies with your net loss of P&L account.
Yes.
This tallies with the net loss of P&L account. That means your sum tallies.
That will be financial loss, no?
I've written financial profit and negative figure.
Okay.
Alright, financial loss and I write positive figure. Right? So this tallies with my loss of P&L account. That shows that my sum tallies. This finishes the sum. We'll stop this here for today. Thank you very much.